2022, a year of disappointment and collapse, a year where the world ended, or maybe a year of some surprises. Well, let's get into some information and actually figure it out, because I think you're going to be kind of surprised, especially if you've been listening to a lot of other people trying to figure out what might be going on during the course of the year 2022. We'll also start to look forward for 2023 in the Las Vegas real estate market. And specifically, this is the market update for January 2023 for the Las Vegas resale condo and townhome markets, where we look at condos and we look at townhomes to see what happened from the prior month and the prior year, and start to try to figure out what might happen in the year ahead. I am Justin Miller, co-founder and principal with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes, including condos and townhomes. We help people grow and preserve their wealth through the real estate market here in the Las Vegas Valley. So let's go ahead and dive right into some of the numbers. Now, this being the January market update, the data were pulled on January 7th. And we look at data for the month of December of 2022. We compared that to the month prior, November 2022, and the year prior to that, December 2021, so that we get both month-on-month comparisons and year-on-year comparisons. We also, though, can use some of that data to look forward to be able to make some informed discussions and predictions about what we think will actually be happening. All right, first, I separate the condo and townhome data because they're two distinct populations of housing product. They're multifamily, and so some people talk about them, most people talk about them as simply the multifamily segment. It's inaccurate, and as you go through the data, you'll actually see inconsistencies between these two segments, and we're going to see them in this month's update. And so I'll point them out to you, but it's the exact reason why it does not make sense to combine these. In fact, statistically, it's inappropriate to combine condos and townhomes into a unified group. Secondly, we, just like in the single family space, I segregate out new construction. So this is specific for the resale market. I do not look at what happened with new construction condos or new construction townhomes. And there's a variety of reasons for that, including new construction is, again, a separate population. It's a separate group of data because new construction product is being sold by one entity or several builders, but it's being listed by particular entities that have many units for sale, where normal resellers have one, maybe two units for sale. And so the market strength of an individual seller varies dramatically, and the reasons for listing between new construction and resale may differ dramatically. And so I segregate those out. We look only at resale in my market updates. If you want to talk about new construction, we can certainly talk about that. Just reach out to me. I can let you know what's going on with new construction, because about 30% of my business is actually in new construction. But not only is the majority of my business resale, that's overwhelmingly the majority of the market as well. Okay, condo prices. Condo prices in December came down. They came down to $210,000. Now that's actually a pretty steep drop for the condo market in any one month. That's down $10,000 or 4.5% from the median number that we saw in November. We are, however, down only $5,000 since the start of the year. So we ended 2021 at $215,000. We ended 2022 at $210,000, or a drop of $5,000, 2.3%. Kind of interesting. Now that compares to single family homes being down 2.4%. So the condo market internally during the course of the year looked a little bit different than, but ended the year looking very much like the single family housing market in terms of where we closed out the year pricing relative to where we opened the year pricing. So down 2.3%. So in a year where supposedly the market was collapsing and being decimated, first surprise. No, actually we came out just $5,000 down across the year. So down 2.3%. That's actually certainly below trend, where a normal trend is growth of approximately 5% in Las Vegas. So we came in well below trend, but we came in down only 2.3%, so not too bad. Let me ask how that compares to your Bitcoin investments, how that compares to your gold investments, how that compares to your oil investments, or how that compares to the interest you're earning in your bank account. Actually, real estate in Las Vegas outperformed virtually every other investment place that you could have put your money in 2022. The stock market is way down. And even your bank account, you've been earning interest in that, but it's been eaten away by significant inflation. The condo you bought, either you're living in it, which means you're not paying rent, you're saving that money that you would be paying in rent, and you're actually accumulating some level of equity because every month your payments go to both interest and principal. So you're paying down that principal. And so you're saving money in your house and effectively living in a manner where you avoid paying rent. Or if you're a landlord and you're renting out your condo, you're getting a return every month that hopefully is doing more than just paying your expenses. So you're getting a positive return. So you made money in real estate. No matter what way you look at it, you made money in real estate if you owned a Las Vegas condo during the course of 2022. That's what that actually means. You either saved the rent or you got rental income, which was more than enough in either instance to make up for that 2.3% drop in the capital price, the sale price of the median condo. That's pretty good in a year where virtually every other asset class lost value. And by the way, yes, gold down over the course of 2022, even though gold is supposed to be an amazing inflation hedge, it actually came down. Oil during the course of 2022, so I don't know the exact cutoff point on December 30th because I didn't look, but oil across the year, while it had spiked higher, kind of like housing prices in May, had come back down, kind of like housing prices in December. And we saw oil prices at the end of the year, not necessarily making a claim about the specific day, but generally speaking across the back half of December, the last 2 weeks of the year, actually lower than oil prices had been at the beginning of the year. So not bad on condos, down 2.3%. Number of condos that were sold. Now we've been under pressure because of higher interest rates on number of units sold all year long, and this continued to manifest itself in December of 2022. We saw 222 condos closed sales transactions during the course of December. That number is down from 253, or down 12.3% from the number that had closed in November. That number is also down 56.1% from the 506 condos that we saw sold in December the prior year. Now, interestingly, there are only 2 months of the pandemic in 2020 where the economy was completely shut down, where we had lower numbers of condos that were sold, and those were just slightly lower. This is actually only 3 months total, going all the way back to July of 2008 during the financial crisis, where we've seen smaller number of transactions, closed transactions. So very low level volume of sales in December for condos. Now, let me put that in one other way, and that is condos during the course of 2022, condo closed sales down 27.0% from the number of closed sales that we saw during 2021. So for the whole year, we've been under significant pressure on condo sales. And as I said, we've only seen 3 months, including 2 months where the economy was completely closed, 3 months since July of 2008, where we've seen lower numbers than what we saw in December. So very weak total number of sales for the year and very weak total number of sales in condos for the month of December. So clearly that's been impacted by interest rates, even though the pricing has held remarkably firm, right? Year over year, down 2.3%, remarkably stable across the year for pricing, regardless of what was happening from any individual month during the course of the year. Now, what about units for sale? As we start to think about what the future might look like, we need to have inventory to sell. So if condos are sitting in inventory, they're available for sale. If condos are not listed in inventory, it's much harder to get a sale on them. It happens once in a while, but it's actually pretty rare. So for sale or inventory condo units, 861, that is down 21.7% from the November number, 1,100. We've got a strong downtrend in place for inventory. We've got inventory falling more rapidly than we have sales taking place. What that means is we've actually got sellers leaving the market at a higher rate than buyers. So inventory is up from where we ended 2021. It's up 50.5% from the 572. So that's good. We're not as badly constrained on inventory as we were right now as we were throughout 2021, but we're still at 60%, only 60% of normal inventory over the prior 10 years. So we are actually really inventory constrained. And what that suggests is that if buyers start to come back into this market, they're going to have less to look at, less to potentially buy, and more people are going to be bidding on those same condos, which is going to push prices higher. Now, what about newly listed? So this is sellers coming into the market during the course of the month and newly listing their condo for sale. We need to replace inventory because it gets pulled out by sales, it gets pulled out by expired listings. And so newly listed is another seller who's come in and said, yes, I'd like to sell my condo. Well, there were 264 newly listed for sale condos during the course of December. That's down 13.2% from the 304 that were newly listed in November. It is down 29.6% from the 375 condos that were listed newly for sale, resale condos, of course, but newly listed for sale during the course of December of 2021. Now, this is again a strong downtrend that we've been experiencing since the summer, and this is actually the lowest number of new listings of condos since May of 2008. So sellers are not deciding to put their condos on the market right now. Now, we always see this number come down and hit its lowest new listings in December of every year. So part of this is a normal seasonal pattern, but this is way deeper than the normal seasonal pattern. And so I don't think we're going to see sellers coming back into this market according to normal seasonal patterns either. I think that we're actually going to see buyers coming back into this market before sellers do once interest rates have stabilized. And that means that those buyers are going to be greeted with less to buy, which is going to, like we saw in the back half of 2020, push those prices higher in the condo market. Now, one other condo statistic, 85 condos had gone into contract and came back on market because a contract failed. That's 27.7% of all contracts failed in December. Now that's down, it's down from 29.0% that had failed in November. But normal is between 10 and 15%. So we're still elevated by over 12% of contracts failing that should not be failing. And they're failing for a variety of reasons: bad appraisals or bad inspections, or unwilling sellers to negotiate around reasonable issues, or buyers getting cold feet, or potential financing problems. There's a variety of issues that cause contracts to fail. But when they're highly elevated, as they have been for the entire past 18 months or more, it means there's some systemic issues, not just the random contract failures that happen every month in any kind of market. And these are happening mostly now because of inspection issues, where either buyers are being too aggressive or sellers are being recalcitrant about making the repairs that are reasonably being requested by buyers. And so it's causing a collapse of the negotiation, a collapse of the contract, problematically so. And by the way, if you're a seller and you're letting people out of a contract because you decided, no, you don't want to give a $500 repair, you may be sitting in the market for a couple more months, and you may be getting less money for your condo. And by the way, if you've got a repair request and an inspection report that highlights something you didn't know and did not disclose on the seller's real property disclosure form, the SRPD, you now need to disclose that. So the next buyer comes along, even if they don't hire their own inspector, you have to disclose what was discovered from that contract that you were in, because you now know about it. It must be reported on the SRPD. Otherwise, you're subject to opening yourself to litigation for having failed to make proper disclosures. And by the way, listing agents, if you're listening to me, keep that in mind, because you take on some liability as well, especially in this kind of a circumstance where you were alerted to a defect, a problem, something that needed to be repaired. And you therefore knew that should have been disclosed if a property goes back into the market, and you know whether or not it was disclosed when that property goes back into the market. And so you're taking on liability to yourself and potentially to your brokerage about failure to disclose if you find yourself in that kind of situation. So make sure that your sellers know this, and make sure that you're monitoring it, because there are a lot of properties that are going back in market. And if that's the cause, you need to make sure that's being dealt with properly. So seller, you don't get out of making a repair. You get to now give notice to subsequent buyers who are either going to ask for money about it, or they're going to ask for a repair about it. So you take on that disclosure liability. All right. Hey, if you like these videos, please subscribe, hit the like button. Please share them with your colleagues, friends, neighbors, if you think they could benefit at all from the analytical methods and the deep knowledge that we bring to these market update videos. Moving on to townhomes now. Now, the townhome market, as I said, it's actually a separate population of housing units. It's not the same as condos. Townhomes price in December of 2022 went up. Surprise, right? Everything was collapsing. Condo prices came down over the course of the year by 2.3%. Townhome prices went up over the month, and they went up over the course of the year. So it ended November of 2022 at $310,000. So they had increased by $2,450, or 0.8%. They actually increased by $2,500 from $309,950 to the $312,450. They increased by, again, 0.08%. It's $50 extra, but I'm not taking the percentage calculation out to too many decimals here. So it's basically the same 0.8% increase in price over November and over December of 2020, the end of December of 2021. So townhome prices increased for the year as well as for the month. Single family home prices down 2.4%, condo prices down 2.3%, townhome prices up 0.8%. Now, that's a differential of more than 3% relative to condos. These are different groups of housing units. They are not the same. They should not be combined. People who combine them are making actually significant statistical errors. And you need to take that into account when you're listening to what they're saying, because you now have the knowledge that there's people who are saying things, maybe even sounding analytically knowledgeable and smart, but they're actually making big errors. They're actually telling you things that are literally not correct. So that's why I separate the condos and townhomes. And we see they actually had differential experiences during the course of the year 2022. Now, what about sales? 152 townhomes closed in December of 2022. That is down, it's down 16.0% from the 181 townhomes that closed in November. It is also down 55.4% from the number of townhomes that closed in December of 2021, the 341. Now this is down one unit, the 152, one unit below the pandemic closing low. And there's only been 2 months lower since February of 2009 in terms of townhome sales. So very weak number with regard to volume, as we saw on the other housing segments, condos and single family housing. So we are down at, well over 10 years ago before we start to see kind of comparable numbers. In fact, we're down to the levels that we saw during the financial crisis. By the way, total townhome sales for the year 2022 down 24.3%. From what we had seen townhome sales throughout 2021. So we're down a quarter, basically, in total number of townhomes that transacted this year. Last year, record high level of volume. This year, though, not only off from the record high, down very dramatically to levels that we saw during the financial crisis. Okay, what about for sale? So this is inventory. For sale, there were 605 units for sale in December of 2022, or rather that's what we ended December 2022 with, the standing inventory. That's down 20.8% from the 764 that were in standing inventory at the end of November. A strong downtrend in place here. Now, we are up very dramatically from the incredibly low inventory that we saw in 2021, actually the end of December of 2021. Now, we had inventory constraints across the entire market in 2021. There were too few single-family homes, there were too few condos, there were too few townhomes, but we saw this issue manifest itself in the townhome space more than we had seen in any other portion of the market. And so the numbers here are really dramatic with regard to how inventory changed in the townhome space. We had 285 townhomes available for sale at the end of December 2021. We've got 605 for sale at the end of 2022, which means we're actually up over 100%. We've more than doubled the size of the inventory. We're up 112.2% in terms of the number of townhomes that are for sale. Now, that's a strikingly large increase in the percentage, but we're still at only 70% of normal. It's just that last year's inventory, especially in townhomes, was so astoundingly constrained that we are that we have this issue where we got more than a doubling in the inventory, but we've got more than a doubling to get us up to that less than 70% level for inventory of townhomes. All right, and by the way, let's look at this one other way. Inventory for sale townhomes came down 20.8% in December from what they'd been in November. Sales had come down 16.0% in December relative to what they'd been in November. So what that literally means is more stuff flew out of inventory than can possibly be accounted for by the selling of that inventory. It means sellers are taking their townhomes out of the inventory at this time. Either they're letting their townhome for sale expire and just drop from inventory, or they're actively withdrawing their listing because they've decided they do not want to be participating in the market at this time as sellers, either because they're renting out their units or they're deciding, I love my interest rate, I'm staying here, or for whatever other reason. So inventory is being actively depleted by sellers removing themselves from this market. It's a really important thing to note, because when sellers actively remove themselves, this is not deterioration of inventory because things are selling out of it. This is deterioration of inventory because some things are selling out, but even more is being pulled out by sellers. That means sellers are not wanting to engage in transactions right now. And this really raises a question as to whether or not sellers are going to be coming back in significant numbers into this market, or we're just fairly early in this continuing strong downtrend of inventory where we're just going to have less and less and less for buyers to look at, which will put enormous pricing pressure into the townhome market, as we had seen in 2021. All right, one other statistic here, and that is newly listed townhomes, 172. That's down 11.8% from the 195 newly listed resale townhomes that we saw in November. That's down 11.8%. We are down 34.8% from the newly listed 264 resale townhomes in December of 2021, down 34.8%. That's the lowest number since December of 2013. And with the exception of December 2013, you'd have to go all the way back to November of 2008 to find lower numbers in the market. So sellers are not materializing in any kind of normal seasonal manner. We are way below where sellers would be normally manifesting themselves, even during the seasonal downturn that we would get in the winter months. And our inventory is being depleted and is sitting at about 70% of normal. Now, one other thing, as I show in the other market segments, back on market. There were 68 back on market townhomes. Townhomes had gone into pending status, had a contract written and signed by buyer and seller, that did not close. They, in fact, not only were delayed, didn't close, they might close in the future, but rather they were canceled. The contracts were canceled and the townhome came back on market. 68, or 30.9% of all of the townhome contracts that were written fell out, were canceled. That is up, actually, it's up from the 26.7% in November. Now, this is the only market segment that saw an increase in back on market in December. Single families came down a little bit, condos came down a little bit, but all market segments are running well over 10% above normal back on markets. Normal cancellations are between 10 and 15%. We're literally double that still in the townhome market. This number has been elevated significantly for over a year and a half now. And so it means you need to be protecting yourself as a buyer or as a seller to keep yourself in contract. Don't rate contracts you're not willing to commit to as a buyer, because you're not helping yourself. You're actually harming yourself in the market and your ability to participate in the market for a variety of reasons. And if you're a seller, don't throw your buyers to the wolves because of something not working exactly as you hoped. This is a weak market in terms of volume, and you need to do everything you can to keep your contracts intact, because prices are not going up strongly now as they had over the prior year and a half. They are holding steady in the townhome market to down a little bit in other market segments. And volumes, transaction volume is very weak. So finding that buyer is hard and important. You don't want to be dismissing that and losing out on the contract because it fails, because you're not treating the contract in an appropriate manner. So I am Justin Miller with the Chong Miller Group, and this has been the surprise January 2023 market update for condos and townhomes, where we saw condo prices did not collapse, even though the world was ending, according to most of the people out there on YouTube, and where we saw actually townhome prices increased month over month and year over year for resale townhomes in the Las Vegas Valley. In both market segments, we came down very dramatically on inventory. We're not getting sufficient newly listed to build that inventory. We are seeing sellers leaving this market at a quicker rate than buyers are leaving the market. And that says something about what we might be able to expect for 2023. Further decreases in inventory, buyers not having much to choose from, and therefore buyers competing with each other, pushing prices higher as we go through 2023. My market forecast that I released last month in December, my forecast for 2023, I suggest we're going to see turnaround sometime in the second quarter, March, April, or May, in the activity in the market and in pricing. And I think once we see that, once we see buyers coming back into this market, we're going to see strong pricing pressures pushing prices higher. So please feel free to reach out to us, make comments, subscribe, hit the like button, and contact us if you have questions or want assistance buying or selling, whether you're buying or selling for yourself or as an investor. I look forward to talking with you. Thank you.